Are you tired of the noise and the uncertainty in your trading charts? Want to see the market trends as clearly as day? Get ready, because we have the perfect solution for you. Introducing the Heiken Ashi Smoothed Buy-Sell Indicator on TradingView. This isn't your everyday indicator. It's a powerful tool that's about to change your trading game. With its unique smoothing technique, this indicator cuts through market noise like a hot knife through butter, giving you a clear, uninterrupted view of market trends. For example, if you had opened a buy trade when the indicator gave a signal, you would have made a decent profit. The most exciting part about this tool is that as soon as the price reverses, it gives an opposite signal. It keeps your wins big and your losses small. You can even profit from these small trends. The way you can add this indicator to your chart is by clicking on the Indicators tab and searching for Heiken Ashi Smoother Buy and Sell by Sunseeder. The following step would be to access its settings and change the EMA length from 55 to 30. By adjusting the EMA, we made the indicator faster. It reacts quicker to price changes and ensures you get out of the losing trade as soon as possible. Even if you follow every single one of these signals, you can still profit in the long run. This is because your losses are so small. However, we still have to filter out these signals in order to increase their accuracy. We tried dozens of different indicators with Heiken Ashi Buy and Sell, yet only a few of them really impressed us in terms of accuracy. So let's add the first one to the chart. This tool is called Super Trend. Many traders have heard about it, yet not everyone knows the biggest secret about the Super Trend indicator. Almost everyone says that you should use this tool to find trends. You've been taught to buy when the super trend is green and sell when it's red. This approach might work sometimes, but not when the market is ranging. A lot of times you might feel the super trend gives you a signal way too late. It's almost as if you've been given a signal when the trend is over. We found a better way of using the super trend. But before we show you it, open the indicator's settings and change the ATR multiplier from 3 to 8. Disable buy and sell signals. Now if we take a closer look at the charts, we notice that the super trend line acts as an average securities price. When the market overextends, it tends to return to its baseline. Check out this latest swing high. The distance between the peak and the super trend was 2.5%, which is very significant. Because of this, the price immediately returned to its baseline. The market simply cannot deviate too much from its average price. The majority of retail traders don't understand this, so they often go long when the market is overbought, or go short when the market is oversold. Instead of this, you can be smarter and do the opposite of what everyone else is doing. Be sure to pay close attention as you don't want to miss the following. With this strategy, we will take a short position when the price is above the super trend and overextended, or in other words, overbought. So we sell at the peak and target the super trend line. You might be wondering, how do we know if the market is overextended? You can use the method we demonstrated earlier, where you measure the distance between the super trend line and the peak. Analyze the market first, and choose a percentage of price deviation with the highest reversal probability. We found that a deviation between 2 and 3% has the highest probability of price correction. Anything below 2% is not significant to make the market reverse to the super trend. Anything above 3% often indicates a strong buying or selling pressure, which often leads to a trend continuation. Betting against the trend during these times is very dangerous. If you'd like a simpler approach, we have a second option. As part of this method, we will use another indicator that will assist us in determining when the market is overbought or oversold. This powerful indicator is called the Easy Oscillator VI4. We'll leave the indicator's link in the comments. This tool is specifically designed for finding real-time divergences in the market, as well as overbought and oversold conditions. The red area at the top is the overbought area. When the oscillator reaches it and the wave trend turns from blue to red, a sell dot is printed. If the oscillator finds a bearish divergence, there is a stronger sell signal. It's when the price makes higher highs and the wave trend, lower highs. The blue zone at the bottom is the oversold area. When oscillator enters or falls below it, this signals a potential reversal to the upside. A buy signal is confirmed when the Easy Oscillator prints a blue dot or a bull label, which stands for bullish divergence. So the new rules for opening a short trade look like this. First, the price must be closed above the super trend. Second, the Easy Oscillator must become overbought with a following sell signal. Third, the Heiken Ashi Smoothed Buy and Sell indicator must issue a sell signal. For safety purposes, Measure the distance between the latest swing high and the super trend. Make sure you skip the trade if the distance is greater than 3%. Target the super trend line for take profit. We found that this strategy works exceptionally well on the 5-minute time frame, but you can try it on other time frames as well. But be sure to do diligent backtesting. That's the only way to find out the strategy's true win ratio. For backtesting, we recommend the Trader Edge app. This app has saved us hundreds of dollars in time. It is beginner-friendly and quick. With Trader Edge, you will get every bit of information about your strategy. In addition, on this website, you can find a ranking of the most accurate indicators and strategies. Sign up for Trader Edge today and become a profitable trader, just like thousands of other traders who have already used the app. Let's return to our trading strategy. For a long entry, the following must be in place. First, the price must drop below the super trend line. Second, the Heiken Ashi buy-sell must print a buy signal. Third, at the time of the signal, the easy oscillator must become oversold and then produce a buy signal. If the conditions are met, take the measurement tool and check the distance between the latest low and the super trend line. The distance must not exceed 3%. Open a long trade and target the super trend line. Now let's quickly test this strategy on the Bitcoin market. Pay attention to the trades we take. In case you don't fully understand the strategy rules now, you have a chance to look at more examples. It is important to remember that no strategy works 100% of the time. Our mission with this channel is to give you the newest indicators and strategies that have a high success rate. Subscribe to Magic Indicator Strategies and turn on the notification bell so you don't miss our future videos. Notice how well this strategy finds extremes in the price. The best part about it is that it ignores all the fake signal that happen in a ranging phase. Only high-quality trades are taken. It is also a good idea to combine this method with price action. For example, you can use support and resistance key levels to find where the market is likely to reverse. This will give you an extra confirmation when executing trades. If you have a scenario when the easy oscillator isn't in the overbought or oversold zone yet, it produces a buy or sell signal. Do not take a trade. If you have any suggestions or ideas about how we can improve this strategy, let us know in the comments section. As we can see, traders, this strategy gives a high win ratio. Almost no losing trades. Thanks for watching this video till the end. See you in the next episode.